Veterans, here's something the military never prepared you for. And honestly, something the VA doesn't clearly explain as well. How much your VA disability income can actually qualify you for when buying a home. And I'm not talking about W-2 income, not side income. I'm talking about using your VA service-connected disability income rated at 100% with the spouse and one child. And today I'm gonna break this down step by step for you. By the end of this video, you'll understand exactly how much you could qualify for and how VA really calculates this. Hi, I'm Alex Ramirez, a veteran advocate, and I've been originating VA loans for over 21 years. And I specialize in helping veterans use this benefit correctly. And if you want clear VA guidance that respects your time, hit that like, subscribe, and tap that bell so you don't miss any of my videos in the future. I do weekly updates. Okay, so here's a scenario. You're 100% service-connected disability, you have a spouse, and one child. The VA disability income would be $4,318.99 per month. And Western Region residual income requirement for a family of 3 is $990 per month. Now let's build this out. Building the housing payment, if we aim to keep principal and interest around 43 to 45% of income, 43% is about $1,857, 45% is about $1,944. So let's use $1,900 per month for principal and interest for this scenario. Now remember, your full housing payment includes principal, interest, property taxes, and homeowners insurance. Your car payments and credit cards are separate liabilities, but they also affect qualification, but they are not housing expenses. Now let's plug in all those numbers. Principal and interest, $1,900, and let's say property taxes is $350 a month, and homeowners insurance, $175 a month. That brings the total housing to $1,900, property taxes $350, homeowners insurance $175. That equals $2,425 per month. That's your total housing payment. And let's say adding other debts. Let's assume $500 per month in other liabilities, like car payments, credit cards, student loans, stuff like that. So now we're at $2,425 housing, $500 for your monthly debts. That's a total amount of $2,925 a month. But the VA adds one more thing, maintenance and utilities. It's not an extra cost they're gonna have you pay, but they make the assumption that your maintenance and utilities are gonna cost about this much extra a month. And the VA estimates this number at 14 cents per square foot. So let's say for this scenario, the house is 1,250 square feet. So 1,250 square feet times 14 cents, that's $175 per month. So now the total monthly obligations, we had $2,925 plus we gotta add the utilities and maintenance, that's $175. So the total amount that we have is $3,100. So here's how you do the residual income calculation. It's very simple. You take your income, the $4,318.99, and you minus the number $3,100 that we just mentioned. So that means you're left with $1,218.99 a month. The VA's base requirement is $990, like I mentioned, for Western Region. So at first glance, this means you qualify. You're over the requirement by about $228.99. But we're not done. And if you're a veteran, reservist, or on active duty, and you want help understanding your numbers, eligibility, or buying power, don't do this alone. Reach out to me. My number is going to be right here on the screen, or you can go to the description below and schedule a call with me. I will walk you through everything so you have a clear plan and you know exactly what you can expect. Okay, so I mentioned that you're not done. What most lenders don't explain, if your debt to income ratio is over 41%, VA requires your residual income to be 20% higher than the standard requirement. Like I mentioned, the standard requirement in the Western Region for a family of 3 is $990. 20% higher would be $1,188. Now let's talk about your debt to income ratio. VA disability income is not taxed. And because of that, lenders are allowed to gross up the income by 25% for the debt to income calculations. So your actual income is $4,318.99. Gross up by 25%, that's $5,398.73. Debt to income ratio is calculated using that higher number. And residual income is calculating using your actual income. These are two different calculations and two different numbers. Using the gross up income of $5,398.73 and total obligations of $3,100, your DTI is about 57%. And that's over the 41%. So now we must meet the higher residual income requirement of $1,188. And what did we calculate? We calculated $1,218.99. That means in this scenario, you qualify, even under the elevated residual income rule. And this is exactly why understanding VA math matters. The purchase price estimate with principal and interest around $1,900 at a hypothetical rate of 5.75%, you're looking at approximately a purchase price of $320,000 to $335,000, right around that number. And depending on the rate and the final structure, of course. So that's something you're going to be going over with your loan officer. And also, could you stretch this a little higher? Maybe you might be able to, but should you really? That's not my decision. That's a personal decision you need to make yourself, but I can help guide you with that. My job is not to max you out. My job is to guide you responsibly. And in some scenarios, gross up income may bring your DTI under 41%. And if that happens, you only need to meet the standard $990 residual income requirement. And also remember, every case is going to be different. Maybe your spouse works, maybe you have zero debt, and maybe you qualify for a property tax exemption. And if you have a regular W-2 job, or maybe you have a business and you're earning money, you could also use that income along with your VA disability income to qualify for a home loan. But in this scenario, we just want to cover just 100% disability income, just so we can see how much somebody can qualify for. And also that, in fact, you can buy a home just with your disability income from the VA. And remember, all of that information changes the numbers for any scenario. But now you understand how VA actually calculates this. And that puts you in control now. And if you have a disability rating with the VA anywhere from 10% to 100%, and you want to know your exact buying power based on real numbers and not online calculators, reach out to me. My description right here, you can schedule a call with me or reach out to me with my number right here on the screen. And I'll walk you through everything step by step so you know exactly what you qualify for and what makes sense for you and your family. You earn this benefit, and let's use it the right way. And remember, be smart, be prepared, and let's get you home.